Some of you may have seen my post last night, my live, saying that I was on my way to a networking meeting at the Institute of Directors in London's Pall Mall. At that meeting, I saw, which wasn't just a networking meeting to get together, it was an actually investors presentation, and there were a lot of investors there from overseas. There were Australian companies setting up in London. There were companies looking for money, looking for millions of pounds in investment to set up their startup scheme. Lots of interesting stuff going on. There was a blockchain guy there who'd set up a blockchain company, and they were looking for investors. So you had investors and other people pitching for money. So it was very, very interesting. I want to tell you all about it in a second. My name is Charles Kelly. I'm the author of the book, Yes, Money Can Buy You Happiness. And I obviously run this podcast, I think, which has about 300 episodes now. So I want to tell you all about this meeting. Now, investors I saw there, they weren't just putting their money into tech startups. They were putting their money also into property. There were a lot of Chinese investors there and a lot of people representing Chinese investors at this meeting. And I went around and talked to a lot of people. One of the young ladies I met has got, their company has got an office in Knightsbridge and Paris, and they invest in prime property in the UK. The minimum project level is around 25 million. So they're prepared to look at small developments in shops with offices or flats above in central London. And so they're looking at big numbers. And I said, well, who do you invest? She said, one family. She works on behalf of one family who are just buying property in the UK like crazy. They're not going to buy every little house or flat. They are into things big time. I met several other investors like that are investing heavily in the UK. And generally the mood and the confidence in the UK is fine, despite the fact that house price growth has slowed in the UK after the end of the stamp duty holiday, which is fairly understandable because everyone was rushing to buy before June. Those who couldn't complete before June then wanted to complete before the end of September and still save £2,500. And a lot of agents are telling me that, you know, their target for the year was met by June and exceeded, and they didn't expect to see much activity after that period because everyone who wants to move has probably done so by now. However, the figures would suggest that sales activity was still up in August and September, and people are still on the move. Remember that money is cheap. Mortgages are very cheap. You can get mortgages at just over 1% now, which is ridiculous. You know, 1% interest on £1 million is only 10,000 a year. I mean, you can't even rent a flat anywhere around London and most of the southeast for less than, you know, 10,000 a year is 800 a month, or roughly. You can't even get a flat for that in the south. So, you know, it's still favourable for people to buy at the moment. But the investors I was talking to are looking much more longer term. They're not looking for a quick fix. They're looking, you know, years ahead, and they are confident in the UK, not just in the UK property market, but in the UK in general. The UK is becoming a leading place for fintech startups, for startups needing capital, for technology companies needing capital. And the capital doesn't come from going down to your bank and getting a bank loan from some guy who wants, you know, your house security and your hand in a vice. These are people who will take risks. They're angel investors, risk capital, venture capitalists. And, you know, I met some very, very interesting people. One young guy I met has got a platform to help hairdressers get appointments. And you think, well, what's that all about? You know, he charges them a fee to get appointments for them. But he's signed up thousands of hairdressers and small businesses like beauty, hair, nail. And he told me that it's one of the fastest growing sectors. In fact, if you look around your high street, you'll see lots of hairdressers at the moment, whereas it used to be butcher, baker, candlestick maker. That's all been sucked in by the supermarkets, the Tesco's and the Sainsbury's. And what's left are more services. So if you walk down the high street now, I mean, my high street, I think, must have 6 or 7 hairdressers, at least 6 or 7, maybe 10. And some of them are quite new. There's a lot of Turkish businesses opening hairdressers. There are hairdressers specifically for the black market, which seem to be booming. You know, I mean, I go past there. They're open till 9, 10 at night. It's buzzing in there. People are having a good time. There's always a crowd of people in there. They're always busy. There's cars parked outside, even at night. You know, so they are booming. And this is what this guy told me, is that they're making a lot of money. A hairdresser now can make £50,000 a year. These nail bar places are making a fortune. One nail bar that was next to my office, the owner a few years ago came to me, wanted to buy a flat that I had for sale, and he wanted to pay me in cash. Not cash like I'm giving the cash to the solicitor, but he wanted to pay me in a cash in a bag under the table without declaring it. I said, I can't, this doesn't work like that in this country. But that's how much money he had. And what this guy's done is set up a platform to help hairdressers become a bit more organised, rather than just being a cash business. And he sets up a payment system. He sets up a system where people can book an appointment online without having to ring the hairdresser, and the hairdresser stops. Hello, oh yeah, I can do you Friday, hold on a minute, and I'm sort of left there with the dripping wet hair while they go and answer the phone, or they have to employ a receptionist to answer the phone. Well, this guy set up a platform for them to be able to make those appointments and pay for the appointment in advance. And the interesting thing about his platform, and there was another guy I met there who's got a platform like this, and they're working together. They've got a platform that not only takes payments, but it imports that client into a CRM system, so that you've got a system where you can keep in touch with clients. A lot of businesses don't have this, and particularly in the building trade, for instance, a small handyman and that sort of thing. They come along, they do a job for £50, and they want to go home and write out an invoice from a book and then post it to you. And then you've got to send them a check and post it back to them. So they're doing all this work that could be just done by one little card reader. And that's where they need to get organised. Because if you stay like that, you're always going to be this one-man band. You're not organised. You've got no customer base. Other things like plumbers who do jobs for me, they do a gas safety check. Very rarely do they come back and say next year, well, I see that your gas safety check is expiring. When can we book an appointment to see you? The only people who do that, in my experience, is British Gas. That's why I have a contract with them, because I know that they're not going to forget, and every year they'll remind me. And so that's part of they've organised it as a business rather than just a one-man band running around writing out invoices in a book. And then you say, why don't you have card machines? Oh no, it's too expensive. Well, how expensive is it to spend all your evenings dealing with invoices, then getting a check, then going down the bank and banking the check, and then chasing up people who haven't paid. One guy's system for people that paid, he said, if you pay me now, and I actually paid him online from my phone to just get it out of the way, he said, I've got my book here and I'll fold that page now. That means you've paid. That's his system, So there's much better ways of organising, and some of these companies now are getting into physical businesses and helping them to organise themselves, to use technology to save themselves time and to build a database. If you haven't your business, one friend of mine told me years ago, he said, your business is in your computer, your business is your database, your clients, it's all there. It's and many businesses you walk into, they will take your details, never contact you again. Estate agents, I've been viewing properties recently, and I've gone online, registered myself with them and said, I'm interested in viewing this property, and they might take you along to view the property, and that's it. They don't send you anything else, nothing. One company didn't even email me. He said, well, we've got a problem with our database. But they're not small companies. You've been around a long, long time, maybe a bit old-fashioned. Whereas there is one company in London, Kingsley, Folkart and Haywood. If you register with one branch of them, you'll get emails every day from one of the branches saying this flat's come on the market, this flat's been reduced. They have a system, you see. They're not just relying on memory. They have a system. And a lot of agents don't have this. They just don't have any system. So, there's a local guy near me. I viewed a property recently. I haven't heard from him since. I had to chase him up to say, what happened to that? He said, the guy still wants the asking price. But he hasn't sent me one single property since then. I said, put me on your mailing list. He said, you're on the mailing list. But then what? It just means it's in his computer. He's not doing anything with it because they haven't got a system. And that's the difference between a business and that you can step away from and sell, and a business that you are the business and you are sitting there folding pages to say that invoice has been paid, or chasing up people on the phone, I haven't paid your invoice. So there's different ways of doing things, and that's what some of these companies are doing. So that was my very, very interesting, very smart people there raising up to £1 million in some cases. Some of them had raised half of it. They were looking for the rest of it. And there's plenty of money in the room, believe me. So very, very interesting meeting. I also follow another one, which is a startup capital organization that helps businesses get capital through tax efficient schemes like EIS, SEIS, where you can invest in a startup and get 50% tax relief. This is mainly beneficial to higher rate taxpayers in the UK. So very, very interesting schemes there. Very smart people. And London has become one of the centres for this, in line with American cities like San Francisco, obviously, but London is there as well. And it's not like the Dragon's Den, oh, no, where's your 3 years accounts? Dragon's Den is like, it seems to be so old-fashioned now that they just don't want anything. And why do you value your business at $500,000? You haven't made a profit yet. I'm not going to give you my hard-earned cash. And this sort of thing. They only seem to want to invest in a business that's up and running and has figures. These are start-up businesses. I know a guy in America that was at university here in London. He went to America and he still looked like a kid. He raised $20 million in startup capital for a tech business in San Francisco. That business today, this is maybe 5, 6, 7, 8 years ago, that business today is worth hundreds of millions of dollars, and it's merging with another company which will make it even bigger. It's involved with a gaming company. Believe me, these things happen. But would he have got that money from the Dragon's Den? No, they wouldn't even understood it, let alone give him the money. So no way. So London has become one of those centres for it. Things are happening in the UK. The city's had its problems, and there's Brexit there, of course. But the city is also raising capital, private venture capital, stock market capital. So things are looking pretty good in the UK in that respect. It's still a financial centre at the end of the day. Now, moving on to another property matter, that's Evergrande. Evergrande has missed another interest payment. That they're now probably, I don't know about serious trouble, because, as I said the other day, the government are sort of helping them out and possibly on the side, kind of bailing them out. But they've missed now 2 deadlines, certainly 2 interest payment deadlines. This latest one was $47 million. They should have paid by Wednesday, but they've still got a 30-day grace period. Last week they missed an $83 million, but struck an agreement with domestic investors over a $35 million payment. So I'm looking down there. But, this is quite serious stuff. I don't know about in your country, but in the UK, if you miss a payment, you miss a payment on your credit card or your gas bill or something like that, they report you. So you miss maybe a £10 or £20 repayment. It gets reported, and it goes down in your credit file, missed payment. These guys are missing payments of millions, of dollars, hundreds of millions now, and then going into their 30-day grace period. They're late already, and I don't know what will happen to them. Obviously, their bonds have been downgraded, so in effect, it has affected their credit rating. But, if you miss a few payments in the UK, you're not going to get a mortgage. You might not get a mortgage for several years. You might not get a mobile phone contract where you pay by direct debit. You might not be able to rent a property. So always protect your credit rating. And as I said yesterday, the furlough scheme, this is the financial and job retention support for over 1 million people, it's over, it's finished. So there's 1 million people there. They're looking now what will happen to them. They're worried about their job because they are dependent on an employer to give them income. They are dependent on exchanging their time for money. And fortunately, there's plenty of job vacancies out there. But whether the job you have possibly been made redundant from is the same as the vacancy down at the Wetherspoons pub for minimum wage is another matter. There's certainly a lot of jobs available in catering, building, farm working, the jobs that British people don't want to do. Heavy goods vehicle drivers, they need 100,000 of those, but who's got a heavy goods vehicle driving license? It would take you months to get it, months to get registered, and probably £7,000 or £8,000 to get it. So, whether these jobs will dovetail in with what the country really needs. I said yesterday that Reed Employment has 300,000 job vacancies, most of them sort of white-collar type jobs. That's one of their highest ever. But there are 1 million job vacancies in the UK, and 1 million people unemployed, doing nothing. 5 million people on some sort of benefit, universal credit, and then there's these 1 million people on the job furlough. The job furlough helped 11 million people to retain their job by giving the employers the money so that they could pay them to sit at home watching Netflix. Now, the money wasn't given by the government. The money was given by the taxpayer, really, or taken from the taxpayer. Well, it will be taken from the taxpayer eventually to pay back the trillions of pounds that they borrowed. But that was given to those people. It has some good points. It helped to retain the jobs. It helped stop the companies making people, millions of people redundant and then them going on to benefits. So in one way it's been good, but the amount of money the UK and America has spent and Germany on these schemes is just ridiculous. It's more money has been printed than there's ever been in existence, I think. So eventually that will lead to what? Inflation, right? Inflation. Because printing money, when it happened in the German Weimar Republic, when it happened in Venezuela and Zimbabwe and Argentina, always led to hyperinflation. This is hyperinflation where something is priced, a loaf of bread is priced in the morning, but by the time you get to the shop with a wheelbarrow full of money, it's gone up again and you need 2 wheelbarrows full of money. Hyperinflation is where you've got a wheelbarrow full of cash outside, you leave it outside a shop, someone steals the wheelbarrow because it's worth more than the cash in the wheelbarrow. So that's probably not the way it's going to go here, but prices have certainly risen. Millions of people already in the UK are paying higher prices, but now they're facing higher energy costs as natural gas and oil prices have just shot through the roof. The natural gas futures market has just gone crazy. So people in the UK are facing a cold winter. I think there's an ad running in Germany which shows people how to make a candle lit sort of heater out of some candles and a flower pot turned upside down, screwed onto some sort of pole, and then the candle light goes up and heats the pot. It's an earthenware pot, not a plastic pot, and the people sit around huddling around this pot. What's going on? It just reminds me of that old joke. We were so poor that at Christmas we would all sit around shivering round a candle, and if it got very cold, my dad would light it. It's that kind of situation. So I don't think it is going to be that, but some people it might be. There's already people in the UK that in winter they're not sure whether they can afford to heat or eat. So this, with these higher energy costs, it will hit a lot of people. I can't quite see any end to it. The fuel crisis in the UK appears to be coming to an end, according to the government, who said there wasn't a crisis, there wasn't a shortage. But it does seem that things may have calmed down. But as of yesterday, I had to do a massive detour to avoid a spot where a garage has people queuing from both ends of the road, and they're blocking the road for like half a mile either side. So it still seems to be going crazy there, but hopefully things will settle down as people realise that they've got a full tank, they can't use a jerry can to go and get petrol, and they can't buy any more. So somewhere it has to stop. The government has also promised to bring in some army drivers or vehicles to help out, but they need a few days to get organised. They told us they're on standby last week, I think, so why weren't they getting organised when they're on standby? Who knows? That's all bigger stuff. I can't control that. So yeah, inflation is coming definitely, and that will lead to further problems, possibly a fall in the stock market. The stock markets have already gone down. Certainly in America, the Dow Jones is down on a September high, not by much, and it's certainly up a little bit this week. But gold and silver and Bitcoin prices are a bit higher. And remember, these could be safe havens for money. Traditionally, it was gold and silver were the safe havens when inflation is kicking in. Maybe Bitcoin. Maybe people are putting their money into Bitcoin. I certainly met people at this meeting last night. Some of them have put quite large lumps of their savings into various cryptocurrencies. And for the young, they feel that it's safer. They just feel that they feel more safe and more comfortable having their money in crypto than they do having it in dollars, pounds or euros. But that's their price. To me, it's still a speculative thing, crypto. Yes, invest in crypto, but only put in money that you can afford to lose, because you may well lose it. And apart from anything else, if you're paying for something in Bitcoin and there's some news comes on in the morning and your Bitcoin that you're holding could fall by 20 or 30% in an hour. Another guy I met was paid to do some work for a company, I think back in 2016, and they paid him some cash and some Bitcoin. They gave him 2 Bitcoin coins, and he said, I don't want these Bitcoin coins. What am I going to do with this? I need cash. They said, just don't worry, just hold on to them. I think at that time they were maybe only worth a few £1,000s. Now they're worth like, £80,000 roughly, nearly $100,000. So he was glad he held on to those 2 Bitcoin. But whether that will be repeated in the future, I don't know. A lot of gold buffs are saying gold and silver, it will rise with inflation, and that's normally what happens. But if inflation is kept under control, they may not rise. Gold is a long-term hedge against inflation. It's usually held its price up against the inflation, but it's something to maybe put a small amount of money into, keep it there. You've got problems with storage in gold, costs with gold. You don't get interest from gold like you do with, say, property, for instance, or a share. But it might be something you want to consider. I'm not your financial advisor, so I can't advise you what to put your money in. I can just give you information and education on this podcast. So those are the financial highlights this week. If you'd like to know more about investing in, say, property, then I just want to tell you about a free property networking event this Sunday. It's at 7 p.m. I put a link up there, and you can find out how to invest in property using none of your own money, and maybe meet some people. You can go to the events in the UK, but if you can't, you can look at it on Zoom and maybe find out more about what's going on from professional property investors. So thanks very much for listening, and I hope you have a great weekend ahead, and take care, stay safe out there. Thanks also to people tuning in here. Ronnie, great to see you. Still out there in Denmark, I guess. How's the market out there in Denmark and Scandinavia? Great to see you, and let me know when you're back in the UK. Okay, so thanks for listening, and do have a great day.